Sound check, 1, 2. 1, 2, good.
Good afternoon, everyone. I'm Gloria Keeley. Welcome to the AFO meeting today. And thank you for coming out in this blustery weather. It's beginning to give us a taste of what's to come, I think. I appreciate those of you who choose to come in person in that it's a lot easier for the presenters to have folks to present to. So thank you for being here. I also appreciate those of you who can watch. I know everyone is incredibly busy, and I know you all make good judgments around that. A couple of things at the beginning of the meeting today. I'd like, with great pleasure, to introduce Dana Lebreau. Dana, please stand up. She has joined my office. Dana is, I think so, she gets a standing ovation from me. She's been with me for about a month now and is already learning a lot about the university and the way things run. She's got lots of experience from the audit background. She's had experience with contracting of many different varieties. She's worked on customer relationship management and marketing. She's got communication skills. So she really is a great fit for our office, and I expect you'll all get to know her really soon, because I will be sending her out on lots of things to do. Also, Rodney, are you here? Rodney is there. Gregory, are you here? Gregory Cunningham, welcome. Gregory joins us from the John Marshall Law School Library, so he's a new member of the family. Is anyone else here who hasn't been here before? Let's put you on the spot. Well, nobody's going to fess up to it. Well, if you're here and you haven't been here before, welcome anyway. All right. It's preliminary audit finding season, so I just wanted to share a little joy with all of you on what's going on around that. These are not formal audit findings yet, but we are wrapping up the audit for this year, and just wanted to let everyone know the things that are being scrutinized. For whatever reason, and I certainly hope no one ever experiences this, but for whatever reason we are having a problem reporting automobile accidents in a timely way. There's a state requirement if you even have a fender bender or any little kind of accident that it needs to get reported within 3 business days. So it looks like there are some challenges around that. Let's see. The famous improper classification of general ledger expenses. Check out the OBFS news. There's some new account codes have been added, I think partially in a way to highlight and correctly classify some additional things, so always be aware of that. Let's see. The famous T-card and P-card findings. We can't ever seem to get rid of them, and one of the things that I continue to be amazed at, but have to remind myself that our audit is not only a financial audit where materiality is very much a consideration, but it is also a compliance audit where materiality is not a consideration. If we don't comply in even one instance, that's an egregious sin, as they say. So if you are greeted by a letter from me or a phone call saying, thank you for participating in this year's audit finding, and it looks like it's a really de minimis sort of thing, it may very well be a de minimis sort of thing, but it is important to the compliance side of the audit. Some of the things that we continue to see there is, on the credit card side, doing things that are unallowable with a credit card, so please watch for that. A special note in this case on the policy that's changing there in January, so be very much aware of allowable payments on T-cards. Quasi-stringing, I'm going to call it. Sometimes there are findings where there are multiple installments to one vendor, which make it look like you're below the card limit, but they catch us on that. So if it's going to be a multi-installment payment that goes beyond the card limit, be aware that that's not an appropriate transaction. Equipment purchases on cards that do not get tagged, that's a big deal with the auditors and with us. Those are the main highlights, I think, for this year. More details will come. As I said, these are just preliminary things that the auditors have found in their testing. I'll have more information on what specifically the findings will be coming up in the spring. All right, those were my announcements. I'd like to bring Jim Martini up now, a few announcements on the accounts payable side.
Good afternoon. I'll add my request to Gloria's to please follow the best you can the policies around the use of cards. I'd add the expectation that those are reconciled in a timely fashion. It seems like every year we have some questions from the auditors, the external auditors and the compliance auditors, that we don't pay attention to our card transactions. So please do that. Payables is struggling just a little bit right now. We're still accommodating some of the things that have happened in Banner 9. I think those of you that work in Banner 9, we work with it every day, 7 hours a day. Every payment that the university makes goes through Banner, and we're just getting ourselves used to it again. All our muscle memory is getting back in line. So we're a few more days out than we usually are or would like to be, but we'll get better. I'd also like to, I think I mentioned it maybe last time, some things that were in the works. One of the things that we've done, Scott Zalatoris is going to speak to it a little bit. We've tried to simplify the 60-day process in TEM. We have moved that requirement. There is an IRS guideline that says an expense should be filed in a timely fashion, and they use 60 days as the example. So we've adopted that several years ago, and you need to file your expense reports within 60 days of the last item on that expense report's expense incursion date. Used to be we were nagging you, if you will, on every line of the expense report. Now we've moved that to the bottom of the expense report, the end, and at the time that the submitter hits submit, they also attest to the fact that they know this was 60 days, one line was at least 60 days late, and they will keep the records that will justify why that was 60 days in the department. So we've simplified the 60 days a little bit. Scott will address it a little more. We've also enhanced your ability to put in a business purpose. We changed it from a text box to a, whoops, wrong way, from a text field to a text box. If you remember what it used to be like, you used to be able to see about 20 characters, and as you type, it was like the periscope on a submarine, and it moved, what you typed moved off to the left, and you couldn't see if you went back, and so you've got a lot more room. And we removed the old barcode, which we don't use anymore in TEM. Many of you probably don't even recall when you used to have to fax your receipts in. But we improved that. We think that's better. We've got another process in the works that will help with human subject payments. It will give researchers and those departments that are involved in research a way to enter the IRB number and associate that with the human subject advance. Should be a little bit better tracking, should give us a few more options on what we can do in that regard. That's about it that I can think of. We are talking about some evaluations of some things. Moving is still on our radar, allowances for moving or some new process for moving expenses. We're looking at what happens with Airbnb. We've heard some comments about Airbnb and who and why and where and how come we can't use it or shouldn't be using a T-card. We're looking at that. We're reevaluating that. Let's see, what else? Can't think of anything else. Thank you for your time.
Okay, I actually do have one more thing, and this is quiz the audience. I have been around for many years now, and I thought I had just about run into everything. Well, I've got a new one for you, so I'm sure there's someone out here who can answer my question. My question is, we have a unit who acquired a trailer, and they want to license it with a U license plate, and there must be someone out there who has done this before. Lots of no's. Send me an email and tell me how you did that. And I have rolling around in my head should the comptroller, should a comptroller delegate sign that because it's on behalf of the Board of Trustees of the university. Anybody who has any ideas around that, I am open to your comments and suggestions, and we'll get it sorted. There are always new things under the sun. All right, on to the formal portion of the meeting. Next up, Terry Thompson and Brenda Sutherland, who are the folks responsible for keeping us compliant with the IRS.
There. Thank you. Good afternoon. My name is Terry Thompson, and this is Brenda Sutherland. We're both from Treasury Operations, Tax Compliance and Analysis, or TCA. During this presentation, we will provide an overview of our department and a summary of the major tax reform provisions that may affect your department. We want you to be aware of these changes in order for you to properly plan for some possible increased costs due to the new tax rules. The mission of TCA is to manage tax and other business-related issues, oversee policies and procedures in order to protect the University of Illinois system's exempt status and to take advantage of all exemptions available, and to maximize efforts to ensure and promote compliance with and awareness of all relevant tax laws and rules. Our mission is accomplished by providing services and support to the system, monitoring, interpreting, and communicating tax legislation, and preparing for tax audits. Our department acts more in more of a consulting role as opposed to an operational role. Tax procedures and resources are located in the OBFS Policies and Procedures Manual, Section 18. Also, there are other useful links throughout the manual and on the OBFS website. Our contact information will be provided at the end of the presentation. Here's a list of the 2017 tax reform topics that we will discuss. Now, not all of the provisions listed here may affect your department, but they all affect the system. So, what is the Tax Cuts and Jobs Act of 2017? This tax reform, that's also known as TCJA, or Public Law 115-97, was signed into law by President Trump on December 22, 2017. Even though the name of the act implies tax cuts, this is not necessarily the case in all situations. This act reflects one of the largest major tax reforms in over 30 years. It significantly changes the tax rules for individuals and for-profit and tax-exempt organizations, including colleges and universities. The late passage of this act has left employers scrambling to interpret and implement the applicable rules, especially the rules that became effective January 1st of 2018, just a couple weeks after the passage of the act. Also, implementation has been particularly cumbersome because of lack of IRS guidance. First, let's start off with moving expenses. If your department hires employees that need to relocate, this new provision affects your department. The moving provision provides that all moving expenses incurred between calendar years 2018 and 2025 are now taxable to employees. This includes both reimbursements and direct vendor payments. Now, at this time, it is at the department's discretion to gross up these expenses. Now we'll look at unrelated business income tax, or UBIT. This is a tax on organizations that engage in any unrelated trade or business that is regularly carried on by the tax-exempt organization with an intent to make a profit. Unrelated trade or business means any activity that is not related to one of the system's tax-exempt purposes, which include teaching, research, public service, healthcare, and economic development. UBIT is not a new tax law, but there are significant changes to the calculation of UBI under the new tax reform. So generating UBI, which may create a tax liability, is not a bad thing, but it is a factor that needs to be taken into consideration as a cost of doing business. Examples of UBI activities at UIC that we currently report include unrelated parking use, athletic facility rentals, campus filming, health and fitness center, advertising, and certain bookstore sales. So if your department is engaging in any of these types of activities that may generate UBI and you're not already in contact with UAFR or TCA, if you could please reach out to us and we'll work with you on these matters. Currently, UBI resources are located in the OBFS Policies and Procedures Manual, Section 1813, Unrelated Business Income Tax. This contains general information on the topic and also a UBI questionnaire. Also, in Section 22, Self-Supporting and Revenue-Generating Activities, it contains additional information on UBI. So now I'll turn it over to Brenda for her to discuss the tax reform changes related to UBI and on other matters.
Thank you, Terry. There are several new tax reform provisions that affect UBI. Prior to tax reform, UBI activities were netted together. Because of this, income from profitable activities were offset by losses from other unrelated activities. However, with the new law, the computation of activities need to be computed separately by each trade or business. This is referred to as creating silos or basketing activities. Also, UBI losses can no longer be commingled with other UBI activities. In addition, the use of net operating losses, or NOLs, are limited to 80% of each activity's taxable income. These new UBI provisions are effective for fiscal year 19. Next, the federal corporate tax rates change from a graduated rate to a flat rate. The highest fiscal year 17 rate was 35%. The blended rate for fiscal year 18 was 28%, and the new rate for fiscal year 19 is 21%. In addition to the federal tax, the system is subject to a 7% state of Illinois corporate tax rate as well. So for activities that create a profit, departments need to budget for a 28% tax expense on a going forward basis to cover both federal and state of Illinois corporate taxes. The system is currently in a position where quarterly estimated payments are now due. If your department's activity creates a profit, it will be charged for any tax owed. Another tax reform matter requires the system to include qualified transportation fringe expenses, or QTFs, as income on the system's UBI tax return effective January 1st, 2018. QTFs include employer-provided benefits such as parking and transit. This creates parity between for-profit and tax-exempt organizations, as these expenses are no longer deductible under the amended law. More information on this matter will be communicated in the near future. The next topic is excess executive compensation excise tax. This new law imposes 21% excise tax on compensation greater than $1 million on the top 5 paid system employees. This provision applies to us beginning in fiscal year 19. There is an exclusion for medical services provided. At this time, after excluding those employees that provide medical services, no UIC employees are on this list. Another provision under the tax reform repeals the 80% charitable deduction if a donor receives athletic seating rights in return for their donation. This became effective January 1st, 2018. Next, advance refunding bonds were eliminated as of January 1st, 2018. The provision repealed the gross income exclusion for interest on advance refunding bonds. This affects the system as it now cannot refinance outstanding bonds that have not yet reached their call date. As a result, the system cannot reissue the bonds to take advantage of lower interest rates. Lastly, the following provisions pertaining to individual tax rates are effective for calendar years 2018 through 2025. First of all, the individual withholding rates were restructured. They went down just a little bit in each level. The supplemental wage withholding rate was reduced to 22%, and the backup withholding rate was reduced to 24%. Also, personal exemptions were suspended for calendar years 2018 through 2025. As a result, Form W-4 will be updated to reflect this change. The IRS anticipates that the revised Form W-4 will be extensively modified and available by the year 2020. so still got a few more years. This is the end of our tax reform summary. While all of these provisions may not directly affect your department, all of these new provisions affect the system in some way, of which some are more significant than others. Here is our contact information for future reference, and are there any questions? Yeah.
So I know you guys said there's going to be more people coming later, but I saw for parking and transit benefits, which we have treated as a pre-tax item, that was supposed to have changed January 1st, so
Yeah, currently they're still being treated as
Oh, I'm sorry.
Currently, they're still being treated as pre-tax deductions. Leadership is working on that matter right now, and System Human Resource Services is working on a notification if there's going to be any changes coming. Well, either the university has to pay the additional tax or the benefits need to change. So we're waiting on clarification on that from leadership. Right, yeah, so for our fiscal year 18 return, we have to report the UBI from January 1st through June 30th.
What I was getting at is once that UBI number is known, how or will that cost be passed back to the individual colleges and units? And when will we know?
Yeah, I'm not for sure about that. I think leadership's making the decisions right now. I know a lot of other universities were waiting to see if the IRS was going to make an exception for not-for-profits and colleges and universities, and we haven't heard anything now. And it's been almost a year later, so we're thinking that maybe they're not going to make the changes, and we'll just either have to pay the tax or take the benefit away from our employees. So. Yes.
and it's now at the individual activity level. Is that defined at a fund code level, or how is that being defined?
That is something that is effective for fiscal year 19, and we haven't made that determination yet, but we'll probably lump certain activities together, like all of our sponsorships across the system. So for all of the universities, will be lumped together in certain similar types of activities, but I don't think it's going to be at a fund code level, but I would have to defer to UAFR on that. We haven't gotten there yet.
Some of the UBI that I calculate, we include indirect costs such as maintenance and depreciation, some of the other things that don't normally go to the program. Is that consistent throughout the university, or just because we did it that way?
No, that's how we do it for all of the activities. The indirect costs are allocated to the activities as well. Any other questions? Thank you.
Okay, is it the back arrow? Keep going forward. Ah, technology is a wonderful thing. Next up is Sandra Hester to talk about another favorite audit finding, self-approved timesheets.
Good afternoon. I am Sandra Hester, Senior Director of University Payroll and Benefits, and this is Larry Hanazuski, Associate Director of University Payroll and Benefits. He so graciously wanted to do this presentation, so I'm going to pass it on to him and just look pretty up here and be ready to answer questions afterwards.
Afternoon. Okay, so the topic we're speaking to is in time and entry, and the issue with self-approving your own time.
And so you can find in Section 4 of the payroll rules in Banner and Anna, it speaks to the proper segregation of duties between someone who enters their time and approves their time. And you would also, this would also be tied to the university code of conduct with how we work in our roles at the university, that we're expected to do that in a way that is ethical. And this issue has been an issue for a couple of years now. Back in 2017, the auditors had identified that there wasn't proper controls in place to help prevent someone from approving their own time. And so it was put in place a processes, and they weren't sufficient. And so that's what they had cited us on back then. And so there was a reporting structure put in place that a report was generated every payroll, and it identified individuals who would violate the policy. They would approve their own time. And so then HR, along with the unit, would work with the violator and the violator supervisor to substantiate the time that was approved in the system, and then that substantiation was forwarded to our office, and we would keep it all in a report and hold on to that documentation for auditing purposes. And so this year, unfortunately, we were finding this issue come back to bite us in a way that there's still individuals that are self-approving, and what the auditors really focused in on was that the individuals would violate this policy more than once, and that it was taking a very long time for the units to report back and substantiate the time that was being approved. And so they came up with an acceptable level that they felt within 2 pay periods or 28 days that would be sufficient time for the units to report back and send in documentation that would approve the time, and it was taking longer than that, a lot longer in some cases. And so being that we're cited again and finding that the current process in place is not sufficient, we're going to look to the beginning of next year of implementing some new procedures to assist with being in appropriate amount of time of getting that documentation back to university payroll benefits, and hopefully maybe even nobody even showing up on the audit. Fortunately, when we get this report every 3 weeks that's generated, it seems like there generally is no more than 2 or 3 violators across all 3 universities. Unfortunately, even with one, if it takes too long to get the correct documentation back, then we're still going to find ourselves with another finding. So starting in January of this year coming up, we're going to put in a new process that will occur if people show up on this report when the calc is being run. And so what will happen is that immediately during the payroll calc, when we find an individual on this report, if we find an individual on the report, then we will remove that record from the payroll calc. And the unit and HR will be notified immediately, and the violators unit will need to, just as they do now, send in the appropriate documentation to show that this person did work these amount of hours during this pay calc. And then in addition to that, once they send in that information, then the unit will then go into Paris and process a payroll underpayment adjustment. So if this is all done quickly, then we will expedite that transaction so that that person will get picked up in that week's adjustment calc and then paid on payday as usual. But that's going to take cooperation to all the units that they would get that information to us immediately. So we feel by this additional course of action that we'll get a more immediate response that we need in the case where we have a violator or violators on that report. So that'll go effective biweekly 1 in 2019. In that you'll find additional supporting documentation on time entry and approvals in the OBFS Training Center Payroll and Benefits training materials. And those specifically, what you see on the screen now is the instructions to prohibit approving your own timesheet, setting up security routing queues and banner setup. And so if we can get into looking at the individuals in our units that are approvers, and if they exist in the routing queues, there are ways that you can set up your security for time approvals that would prevent someone from approving their own time. And so two simple ways would be to set up an override on that individual's timesheet that you would find on form NB, or now it's page in banner 9, NBA JQ. And then the other potential solution would be to put that individual in a different routing queue, different timesheet routing queue, where there would be a different approver to approve their time. We'll begin this new process, as I said, at the beginning of the year, and I think I just went through all this information a second ago. One thing I just want to stress that I didn't is that the day when we're talking about calc generally is Wednesday. And so when that timesheet is removed and we communicate with you, you'll have to close a business to get that information to us so that we can get that information into the adjustment calc that happens the next day, so the person's check will occur on payday, normal payday. Next adjustment calc is the following Thursday. So if for whatever reason the unit's not able to get that information or that substantiation to our office on the day that we're processing the payroll calc, the next deadline for adjustments is the following Tuesday at noon. And so that payday would be Friday, which would be 2 days after the normal biweekly payday. So if there is a need for additional days to get that information, then the consequence is to be a few days later for the pay date.
So are you implying that when you're saying that violators won't be paid on the regular date, that the payroll will be delayed?
It doesn't have to be. And it's kind of confusing because of the deadlines and that, but the day that we would get the report, so the report generally, in most cases, unless there's a holiday and the calc's been, set back one day, generally is always, it's generated on Tuesday night. So Wednesday morning, in our final day of the calculation process, this report is available. And at that point, Payroll and Benefits will view that report. And if there's people on that report that are in the calc, their sheets are going to be, their timesheet will be removed. And so we'll communicate with the HR and the representative from the unit to request the documentation, the approval for that time that is basically at that point unauthorized because the person had self-approved. So if that can get to our unit by 5 p.m., and then the unit would go out there and process an adjustment in Paris for that payroll being processed, the person will get paid on time.
And if that doesn't happen, then payroll is for 2 days.
Then if that doesn't happen, that's correct. The next deadline would be the following Tuesday at noon for that for that substantiation to get to our office and for that adjustment to be entered into Paris. And that's correct. That adjustment calc happens that Thursday. That pays Friday, which would be 2 days later than the regular payday.
And just for clarification purposes, we will be communicating with the violator as well. So I will assume that if the violator sees that they're not getting paid, they're going to instruct their supervisor to get that documentation to us immediately.
Any other questions?
And one other piece that we're going to be adding to this process, there is a preventative measure that we're going to be working with the units on, and that preventative measure is, like Larry said, the individuals that do have the ability to self-approve their timesheet, we're going to be scheduling meetings, sending out communication to these units to go over the security roles and the setup that they have for these individuals and try to minimize the number of folks that have that capability. So we anticipate that process to begin sometime in January as well, in sync with this new process. But our purpose is to minimize the number of folks that do have that ability to self-approve and to just ensure that departments and units understand the security and the roles that they have set up for these individuals.
Any other questions? Okay, if you have any questions or you need to contact us, sorry it's not up on the presentation, but it's a pretty easy email to remember, payinq@uillinois.edu, or you can call our customer service number that is at 312-996-7200. Okay, thank you.
Okay. Next up, Jacqueline Jancius to talk about the new financial conflict of interest in research. Which I have now goofed up.
How are you today?
Okay.
Get you started here. Oops.
That's not
bad.
me.
Yeah, well, that's not you. Come on. Sorry. Now, here we go. There you go.
Okay, great. Thank you. Great. Good afternoon. My name is Jacqueline Jancius. I'm the Director for Conflict of Interest in the Office of Vice Chancellor for Research. Just here to give you an update. We did have a policy on conflict of commitment and interest, and we had, as part of that policy, crammed into it elements of the financial conflict of interest in research that was required by the Public Health Services. And so that happened in 2011. It was required for us to implement it through the policy, but then we went through a major policy revision in 2017. And 2018, we approved the policy. So what we did was we separated out the policies. So we have a conflict of commitment and interest policy, and that's for all academic staff. And then we have a financial conflict of interest in research, and this is focused on the Public Health Services regulations and also other sponsors that require us to have conflict of interest oversight in the sponsored research projects. And then we also have an organizational conflict of interest policy, which is aimed at research and research-related business transaction. And so you can see from this chart here who it's applicable to. So each policy is applicable to a different group, but some people overlap groups, so they may be applicable to all three, just depending on who they are in the university. And so the focus on this presentation is the financial conflict of interest and research policy. The policy is there to promote objectivity in research by establishing standards that provide a reasonable expectation that the design, conduct, and reporting of research will be free from bias resulting from financial interest. And the policy informs the investigators about situations that generate financial and conflicts of interest related to research and provides mechanisms for investigators in the university to eliminate or manage the financial conflicts of interest that arise. And there are two procedures laid out in the policy. The first procedure is under Section A, and it explains the procedures that we have for the public health services, and this includes PHS, HHS, Health and Human Services, and NIH, National Institutes for Health. And then the Section B applies to all other sponsors, including like the National Science Foundation. And so A is a little bit more rigorous and onerous on the university as well as the investigators. There's more information that has to be disclosed as the requirements of the public health services. And then the process for B is slightly less onerous. And I just want to remind you that we go through and we use the process online. We have the Start My Disclosures application. Investigators go in, they complete their training and disclosure through Start My Disclosures. Really, the policy didn't change anything in terms of what we do, but the process is still the same. We just took the policy, we updated it, we made it applicable, we explained all the processes, and we mirrored the processes that we use in our online application. So, if you have questions about using the online application, please feel free to contact me. Please feel free to contact Scott McEwen. He's the COI coordinator. We can help answer your questions. If you're new to the university and you've not used the systems or you have new business managers working with you, we're happy to give a tutorial on how to use our systems and get you through the process or help you learn how to use our applications so that you can easily submit your checklist and your investigators can be compliant with the conflict of interest rules. All right, any questions? No. Are you sure? Really? All right, well, great. Thank you so much.
Thank you. It occurs to me that we are just being bathed in compliance issues at this meeting, so I expect that we will have perfect audits going forward. It's marvelous. Next up, speaking of, is the Fiscal Control and Internal Auditing Act time of the year again. So Mike Gotzel is here to give us some information about that application and its processes.
How do I move me along here? That's good. That's fine. Hi, I'm Mike Gotzel. I'm from University Accounting and Financial Reporting, and I'm going to speak a little bit about the Fiscal Control and Internal Auditing Act, also known as FISHA. FISHA is a state-mandated program to aid state agencies conducting reviews of the fiscal and administrative internal controls, and it requires agencies to report material control weaknesses to the state. Every agency in the state has to do this, not just universities. They all accomplish it differently. We have a pretty robust program for how we accomplish our FISHA process. We have a survey of 30 some odd questions that we ask all departments to answer whether they comply with certain internal controls that we have established here at the university. We asked them to reply with a yes, a no, they partially comply, or the control is non-applicable to them. I've probably been doing this fish reminder, for probably close to 10 years now. And for the first 8 or so years, we went from a paper process a long, long time ago to an electronic process about 5 or 6 years ago. And the reminder in the presentation that I gave was mostly about the process, who does it in the office, how it gets approved, and how it makes its way through the campuses and universities, colleges, campuses, universities, until eventually it gets consolidated and the president certifies our compliance with FSHA. What we worried about is that we weren't actually, for those first 7, 8 years, we weren't actually getting any questions in our department about the actual internal controls that were on the survey, or how that it was being applied in the departments. We thought it was becoming too routine, too rote, that maybe it was a box-checking exercise, that they had to do this, every department had to do this. So they answered yes, 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 yes really quickly, and it got through the system, and we always certified it at the president. But we wanted to make sure that this was an actual good tool. So last year, instead of talking about the process, I talked about instances where we had some internal control breakdowns at the university that got the university bad media in the paper. And I had headlines about past malfeasance and fraud and losses of hundreds of thousands of dollars and prison time and all that stuff. And I think Gloria called it compliance through terror or something like that. But I'm not going to go through that again this year. It's actually taped and it's out there on the webinar on our website. But and so this year it's going to be just a basic overview of FSHA. But what did happen last year is that since we got away from the process and we did scare individuals with these internal control breakdowns, is we got a lot of questions on the process. Should I be doing this? Should da-da-da-da-da? So more units wanted to comply with the FSHA process, and they were thinking that maybe they were being passed by or it was skipped over and that they were going to get in trouble for this and stuff. So we're going to have a piggyback to my presentation by Mary Ellen Corman with UIC-specific FSHA processes, and we'll get through this a little bit quicker. So what are the benefits of FSHA? The benefits of FSHA, or any effective internal controls, are that it helps ensure efficient and effective use of your unit resources. And it protects against any misuse of resources, adverse audit findings, or negative media coverage. We don't want to get any negative media coverage. Last year there was one specific instance where we had some internal control breakdowns that still to this day, 30-some years later, are still generating headlines every other year or so. Benefits of FSHA also, it demonstrates good stewardship to the state, granting agencies, donors, or taxpayers. These are the individuals or groups that we're responsible to or beholden to, the ones that provide our funding. Internal controls check reliability, accuracy, and timeliness of information. They ensure compliance to policies, procedures, and laws, regulations, and contracts. They safeguard assets. They promote efficient use of resources. And they fulfill objectives and goals. Who completes the FSHA certification? We used to have it at every 6-digit department code, but there's lots and lots of those, and there was lots of redundancies in that. This year we switched it to the 3-digit department code, and Mary Ellen will speak a little bit more about that, I think. It is submitted or prepared by an individual with the knowledge of the business processes in each department. It is reviewed and approved by the individual with fiscal responsibility for that department. There's 3 different roles within FSHA. Actually, there's more than that, but these are the 3 most important roles as they apply to departments. There's the administrator. They're kind of in the background. They're maintaining the tables. They're generating the email notifications that you're a submitter, you're an approver, these are the timelines, et cetera. The submitter is the individual in the department who actually fills out the survey. And the approver is the individual responsible for approving the FSHA form. And Mary Ellen, once again, will go over a little bit that in a little bit more detail. Okay, tips for your role. Look critically at your fiscal and administrative controls. There are no gotchas in this. Nobody's going to come out there if you put no or partial and give you a bad report. We want you to list no or partial if you are not complying to this internal control. View the questionnaire as a useful tool to help you evaluate the condition and effectiveness of your unit's control environment. And be candid in your responses. If you find a weakness, you can include a comment that you're addressing it or need assistance. About the worst that's going to happen is we're going to come out and assist you in mitigating any weaknesses that you've discovered or found related to the internal control on the survey. Okay, there's some resources at the Accounting and Financial Reporting website, which is under OBFS still. There's a basic overview of what FSHA is, which is basically a rundown of what I've just went through. There's the actual FSHA questionnaire out there, of all the FSHA questionnaires. And within that, those questions, you can drill down on each specific question and learn a little bit more in simple language why we're asking the question about this internal control and why it's listed. If you drill down even farther, you can find specific university policy related to the internal control question on the survey. A couple examples of some of the questions out there. The first item under the asset management section would be changes, transfers, and deletions of assets are recorded promptly in unit equipment inventory records. And then we have some simpler language about why that question is even on the survey, saying custodial responsibility for property control require that a unit develop a process to alert property accounting about any new equipment purchases, changes to equipment location, custodian, condition, anticipated transfers, and disposals. And then there's also the related policy that applies to the question. In this case, 12.2.3, comply with unit head property custodial responsibilities, and you can actually drill down on the policy. Another one of the questionnaire, the last one we'll go through today, this is kind of an important one. Accounting and financial statements are reviewed each month, and appropriate actions are initiated to reconcile transactions to unit records. This is just the monthly financial statement reconciliation where we have you substantiate each transaction that's appearing on your financial statements. It's a lot more fun to sit up here and talk about malfeasance and fraud and loss of dollars, and it's a lot more exciting and scary anyway. But the truth is that most people are good, and fraud here at the university is fortunately rare. But it's also true that even though these people are honest and good people, we do make honest, inadvertent mistakes where maybe we accidentally post to another unit's FOP. This control procedure would be one where we would discover those inappropriate and take action on how to fix that. Once again, there's some more simpler language as to the question, why it's on there. And then in this case, instead of a policy, we actually have a training guide that goes through the reconciliation process, how to identify certain things on your financial statements that maybe you don't know how that they got there, and how to correct things that appear on your financial statements that aren't appropriate. Some more resources on the University Accounting Financial Reporting website. We have some job aids out there. Maybe you are new to the FSHA process and you want to learn a little bit more about the FSHA roles or how to manage users in the FSHA process and how to identify any kind of material weaknesses as they apply to internal controls. We also have some online training. If you're a new submitter or approver, you can go out there and go through that training. FSHA training for the other roles other than the submitter and approvers are also out there if you're at the college or university level in a new role. And there's also some webinars, including the one that we did last year on keeping your department out of the newspaper. So you can go out there and check anything you want on FSHA. This is a generic timeline for the FSHA process, and it's generic because I'm going to go around to each of the university campuses and deliver this, and the dates are just slightly different. Mary Ellen will talk to the specific dates as they relate to UIC. And finally, these are the contacts. If you're in the system office up here, you would want to speak with or email Janet Ford. In Chicago, Dana and Engelbert would be the resource that you would want to contact. And if you can't reach them, you can always reach either me, Mike Gotzel, or Jason Bang. I'll turn it over to Mary Ellen. Thank you.
Hello, I'm Mary Ellen Corman. I'm Associate Director in the Office of Budget and Financial Analysis, and just want to go quickly through this campus's central review and priorities of FSHIA this year, remind the submitters their responsibilities, and highlight what's needed in the disclosure statements. So our primary goals for FSHIA this year is we want to engage in a completely transparent, thorough, and compliant audit process, and provide sufficient evidence of due diligence where we need it. Our secondary goals for this year, we want to streamline the process, make it efficient, make sure we get as much information out as possible to the units, so this process is well understood, but the units do need to put in a reasonable amount of effort. And the AFO and the business manager responsibilities. At this point in time, you should be looking at who is assigned surveys. And as Mike mentioned, every 3-digit department needs to have a survey. Let's eliminate any 6-digit surveys that are out there that are not required. You can have 6-digit surveys if you've got multiple business managers who oversee separate aspects of a department. For example, if you've got one large 3-digit department that's divided into separate 6-digit departments that have their own business managers and own processes, then leave the 6-digit surveys in. Or if there's a single business manager but there's multiple programs with separate compliance needs. Again, we want to streamline the process this year, and we do recognize that there are some 6-digit surveys that are necessary. The submitter responsibilities. What items must be disclosed? Internal audit findings from the previous academic year, and even if the plan is fully implemented, they still need to be disclosed on the FSHIA survey. If it's implemented, note it on the survey, but leave us with a contact name. And if the plan is not fully implemented, disclose it, and I'll give you some examples upcoming about what to talk about. Also, any units with reportable FY18 deficits greater than $10,000, and this list went out to the deans and the AFOs recently. Our office will be sending out not only the list of the audits, but also a list of the deficits to the AFOs, so they are reminded they need to note these in their FSHIA survey. FSHIA will also have a flag on the department with an audit. There will not be any flags for the deficit, so you'll have to do that yourselves. And again, if there's a deficit reduction plan that's been submitted, note it on the survey with a contact name. If the deficit reduction plan has not been submitted, also disclose that. And this is a sample audit notification. I'm not sure if you can see it, but when you get into the 3-digit department code, there will be this red audit notification that the department needs to disclose the audit. And how to disclose less than full compliance. We don't need a lot of detail, but we do need a narrative detailing the specific and meaningful actions. the plan that will resolve the compliance issue, identify a contact person, provide a timeline, and any of these actions need to be included in the college memo. Again, the narrative does not need to be lengthy, but it does need to be complete. And any surveys we find without disclosures, we'll return them back to the units. Sample actions to take, create and implement new policies and procedures for the unit, train staff, add internal controls such as additional approvals, segregate duties, hire new staff, reassign duties, or engage the business office to provide assistance or recommendations. College responsibilities, once all the 3-digit and 6-digit surveys are in, you address the memo to your college's leadership, whether that be the provost, the vice chancellor for health affairs, or the chancellor, but do not send the memo to your college's leadership. Send all memos to our listserv, bpa@uic.edu, and we will review and compile these for the leadership. Again, anything that you disclose in the Fishious survey must be included in the memo. And if they're not, we will return the memos. So on this campus, mentioned our contacts are Dana Lebreau and Engelbert Ruiz. If I could have you guys stand up. So these are the people you need to talk to. If you've got information about the system, how to use the system, questions about changing the submitter or the approver, following up on overdue surveys, any question you have about Fishia, see these people. And the dates. Please note, review of submitters and approvers are due tomorrow. And at this time, you can eliminate 6-digit orgs if you do not need them. The application will be open to all users on November 12th. The departments will be due to the college offices on December 10th, and then the college memos are due to our office by January 7th. Any questions? Yes?
So Mayor, the surveys are going to include a notation if an audit is completed.
If an audit,
Regardless of whether there were like any material findings in that audit.
then you can just state that there was an audit, and I will, like I said, I'm going to send out to the colleges that had audits. We'll send out a list so you know what's out there, and we'll also resend the list of deficits too. Any other questions? Cool.
Scott, I hope you have some good news for us, something positive and energizing. Excellent.
As it means I'll have a job for the next 40 years. Okay. All right. Good afternoon, everyone. My name is Scott Zalatoris. I'm the policy specialist with OBFS, and I have a brief presentation today to talk about updates to the manual, some upcoming changes, a couple important reminders, and then any time for questions. As a opening general statement, and I'll always make this, the OBFS manual has an updates page. I only talk about a few updates that are made here, major ones, but any change made to the manual is displayed on this page, listed by month in the fiscal year, what was changed and where it was changed. So if you're ever curious, this page lists all the changes. So far in FY19, we've made 27 updates to the manual. That may have ticked up one or two since I made this slide. So we do make changes frequently. If there is a change to your business process, that's usually when we communicate it. These are often minor changes. I do encourage you to sign up for the OBFS news service, the official way we communicate policy changes. And as a reminder, please download new forms. Every time you use a form for a transaction, if you save it to the desktop, there's a good chance sooner or later it will become out of date. It's the easiest way to get a transaction caught up or rejected is using an old form, so please download new forms. Okay, Jim mentioned the recent policy change 824 regarding the 60-day requirement. I won't go into the details past what Jim said, only to say that the manual, the policy now reflects that they may be reported. So just keep in mind you're certifying that you understand that they're after 60 days that you're going to have the justification that we may ask for. That requirement, like Jim said, will streamline. It is reflected in policy. So I won't give the detail because I don't want to say anything other than what Jim said because he's certainly the expert. A upcoming policy change, and this one is a big one. This is 861, currently called Request Direct Payment for Approved Goods and Services. This is that direct pay exception list, what will become the TEM allowable payments list. So we've talked about this for a month or two. We put out a blog post outlining what is changing from the direct pay exception list, what's being removed or added to or augmented in the TEM allowable payments list. The blog post you can get to from this presentation from the open comment period blog on the OBFS policy manual website has that list. Just this past week, I've added another document. It's a side-by-side comparison, the direct payment exception list, the TEM allowable payments list, and what's changed. There have been some items that have been removed, like books and subscriptions. There have been some items, thresholds have been changed, and there have been some things added, like the contract for services template. So payables has been looking at TEM transactions that will ultimately be rejected come January 1st with this new policy. Those folks who are submitting those will be contacted by email. They haven't been already very soon, giving them a heads up that this change will happen. I encourage you to please go to this website and look at the list. Start thinking about how you may have to process procurements differently under the new guidelines of what is going to be allowed or not allowed for direct payment through TEM. Some things that have been removed will have to go through purchasing. They'll become standard procurements. So this list may impact you. So far, 87 people in the entire system have looked at the blog post. I hope it means that the other thousands had the list somehow. But please do go to this page because this will go live in January 1. You'll see announcements. You'll be contacted, and when it hits, when we come back next year, things will get rejected. I'm going to jump back, actually, and just use the heading, upcoming policy updates. I don't have this on a slide, this list, but I want to give you a heads up on some projects we're working on in OBFS for updates. The cash advance policies, Jim talked about the payments to human research subjects is going to be a new type of listing in TEM. In concert with that, we're working on general updates to the cash advance policies, going to create a cash advance resource page where you will be able to see all of the disparate cash advance policies on one page, everything, all related information with updated training documentation. So you'll see those new policies. That's being targeted for January, January publication, maybe a little bit later. That may also go to open comment period. We haven't finalized the final changes to those policies. The rental lodging broker policy proposal, Airbnb is more commonly known. Thank you to everybody who submitted comments. I love when we get open comment period feedback. I especially love it when people are revved up because it means they're actually considering what the changes made may mean to them. So I appreciate the feedback. We've actively considered it. We're almost at a point where we're going to make a change or augment the current process, but what you've provided to us in feedback, we review it and we take it seriously. And it gives us an opportunity to realize there's a different business environment than we thought may have existed. So thank you to everybody who participated in that. Communication regarding changes or not will be forthcoming. In addition, payments to students policies. We're updating payments to students guidance. We're going to be adding back to the manual payments to student policies that will work in concert with the guidance to provide you specific process information in the guidance for processing different types of payments to students. We'll have high-level policies regarding what is and isn't okay for payments to students, how things should be treated for tax reporting purposes, things like that. That's coming, hopefully, to open comment in February of next year is my target right now. A project that I've wanted to work on in the 6 years I've been doing policy is the allowability of gifts, prizes, and awards paid to employees, paid to non-employees, for national student employees. 814 is the main policy, but the reporting information, the taxability, the processing, it's all over the place. I know it's all over the place, and I know that the information isn't always complete. So I'm working now with the directors in payroll and payables and tax, and we're fixing the policies. We're going to provide complete information related to taxability, related to how you report the taxability, what's appropriate way to purchase gifts, prizes, awards, cash equivalents, things like that. That will be coming out. I hope to have a complete draft in January, again, targeting hopefully February for an open comment period of review with the system. Motor pool vehicles, another set of policies that we're going to be reviewing, specifically the accident reporting requirements and the approval for who gets to drive a vehicle, who gets to have a department-owned vehicle. That's in its infancy right now. It's a continued audit finding, but we're working to address the current standard. We have a 7-day reporting standard for CMS. We have a 3-day internal reporting standard and a 24-hour campus-specific reporting standard. So we're looking at everything. And you'll see any changes, again, to an open comment period, or most likely I'll be back here before we get to that point. And the last one, non-monetary exchanges. In Section 13, for those of you who have non-monetary exchange activity, we have 3 separate policies. We're working to consolidate. We have a final draft of one policy that simplifies the information, what a non-monetary exchange is, how you calculate it, and then the report, the form that you have to submit to report that non-monetary exchange. I'm always looking for ways we can consolidate and simplify. This is one that will be out very shortly. So if you have non-monetary exchange related activity, look for that change. It will be communicated. Okay, and the last bit, important policy reminders. I always bring this up, end of year, holiday events, receptions. There are very specific reasons, circumstances, maximum surrounding receptions, refreshments, business meals, providing gifts. 811, 812, 814 outlines what those are. Please take a look as you start to plan, or people in your apartment start to plan holiday parties, or what they may commonly be called as holiday parties. They may be something else. But the information in these policies, specifically the maximums, the dollar amount maximums, are incredibly important. You'll also find links to the P-card, T-card quick reference guide. Depending on the circumstance, what you use to buy that popcorn at Jewel may be a P-card or a T-card. Is it confusing? Is detailed. So please consider the policies, consider the quick reference guide. Contact me, contact Payables if you have any questions. It's better to answer the question before you make the purchase than trying to resolve it afterwards. And with that, are there any questions I can answer? Okay, thank you very much.
Okay, something else has triggered in my mind related to a reference Mike Godsell made that I need to share with all of you. And he made a reference to the information still being available on the OBF website, or at least yet, I think you said, Mike. I need to share with people. I'm sure you're all aware that we have a new Chief Financial Officer, Avijit Ghosh, who was hired in the spring of this year. He is taking a look at his organization. So for those of you who are not aware, he has decided to hire a new controller and associate vice president that will report directly to him, and under that person they will have responsibility for UAFR and university payables. This is just part of a new senior leader coming in place and taking a look at his organization and understanding what he wants to have done. We are in the very early stages of understanding what the chief financial officer's website looks like, how are things going to be presented going forward. But what I can assure you in the meantime is the OBFS website will continue to be there and continue to provide you comprehensive information. Stay tuned for further developments. And next, an incredibly important topic, Shauna Claiborne is coming to tell us updates from the Office of Procurement Diversity.
All right, thank you. Okay, so good afternoon, everyone. My name is Shauna Claiborne. I'm with the Office of Procurement Diversity. I'm the Supplier Diversity, and my office is located on the Urbana-Champaign campus. I brought with me my colleague, Karen Hardaway, and she is located at the Chicago campus. So I just came by to introduce myself and give you a few brief updates from the Procurement Diversity Office. So I just wanted to highlight a few vendors that we have in iBuy. So if you are using any of these vendors, great, thank you, we appreciate it. We just want to kind of remind you that there is a lot of opportunity to help us reach our 20% aspirational goal set by the state of Illinois Business Enterprise Program. So first, we have Destiny Paper, which is an easy way to contribute to the goal. It's in Office Depot, and it is a minority-owned company that supplies great eco-friendly and quality paper. So easy to help contribute. Our IT consulting services contract, some of you may be familiar with it, KRS 102. Maybe the CIO office and OBFS can reach out to them to see about our perhaps website project or any website design or IT services that your department might need. We have 28 vendors that are on this contract that we should utilize for any IT needs that we can't use or get from our internal IT department. Biennale promotions. We have some cards, some promo cards that we're going to leave out on the front desk, but Biennale Promotions is a woman-owned vendor. They have great promotional items, hats, keychains, whatever you want. They have, they're able to design it according to your campus or your university colors or logo. And it's a woman-owned company, as I believe I stated, and they are looking to do business here, more business. We are always looking for ways to easily identify our diverse vendors. And when we say diverse vendors, just to clarify, these are certified Central Management Services, BEP vendors, Business Enterprise Program vendors. So these are minorities, women, disabled persons, and veterans. So look for the symbol. The D is diverse, DS is diverse sub awards. And just wanted to make a note, I just learned this recently, that some of the vendors are not easily identifiable. But diverse subs are not as easy to identify as we would like them to be. For example, Office Depot lists their diverse subs easily to see on the side. Some of the other ones are kind of hidden within their punch-out catalog or within, so you kind of have to search and find out who those diverse subs are. So we did make a list of some of those diverse sub award vendors so that you can easily find them in the punch-out catalog. Always promoting OBFS News as our main communication tool. We would like to start communicating more using this, as it is important to help promote these vendors that we have in iBuy or that we have contracts with. So please, you're already subscribed, I'm sure. We also are sending out a quarterly newsletter to help stay connected with you guys and to share information on what our department is doing and what the vendor community is doing. And we just want to introduce ourselves, get our faces out there more. Please contact us if you need help identifying vendors that you want to use, or you don't know who to use. We can help you find someone that can meet your needs. And if you have any other questions, our information is located on the Who to Ask page, or we have our card. Well, I have my card that I'll leave outside on the table. So short and sweet. If anybody has any questions, I can try to answer them. All right, thank you.
Thanks, Shauna. I should mention that the Office of Procurement Diversity just executed a very productive and successful construction summit earlier this week, and there were lots of diverse vendors there learning about the university, ours and others, in terms of opportunities. There were prime contractors present with tables so that they could begin a partnership. Lots of opportunities in the area of procurement diversity. Please do make an attempt. This is a very important goal, objective, not only for the university senior leaders, but also for the Board of Trustees. Okay. Next up, property accounting updates. Jeff Weaver.
Good afternoon. So glad to have the last 35 minutes to share with everybody. I'll try to keep it to my normal time frame. I want to introduce myself. I am Jeff Weaver, Director of Property Accounting. With me today, I brought Magdalena Yock. Magdalena, if you would stand up. For those who probably worked with Janet Ayers in property accounting for the last 30 years, Magdalena is our new Janet Ayers. So anything related to biennial equipment disposals, Magdalena is your awesome point of contact for great customer service. So I want to thank Gloria and the group for a spot on the agenda. I want to talk a little bit about your unit's current or upcoming biennial cycle, a little bit about the new inventory application, and provide you just a few property accounting updates as well. So the biennial inventory, what is it? State regulations and university policy require this be a complete physical inventory of equipment. No spot checks, no test counts, complete physical inventory of all equipment in your facility. It requires the updating of records. That's the state expectations. Is all the aspects of that inventory records accurate? If you have discrepancies in those records, it is the expectation that you dispose of your unfound items after an exhaustive search in your unit, to do those transfers out of your unit, and as well as the certification. So basically the state and the university expects you to make sure that inventory list is accurate. Complete, nothing missing, all records accurate. So why do we do it? State Property Control Act mandate. If you haven't been audited by the auditors before, equipment is highly regulated and highly audited. Why? It's tangible property. It's easy for them to go out and see and do. So very easy audit procedures for them. There are some great value-added benefits of the inventory. One is that record accuracy. The records are really great to keep financial reporting accurate, to help with budgeting, future budgeting. as well as it's used for those facilities administrative rates. We want to get that 50% and more back from the government, right, to cover our overhead. Another value-added benefit, through the process, you may identify you have some process problems. If things aren't coming off your inventory or if things aren't getting added to your inventory, you may very well find some systematic problems by finding your errors. And you may also, if with Mike saying let's keep ourselves out of the paper, maybe you might identify some issues of theft or fraud before that gets any worse and we get in the papers. And of course, why I'm here, we have a high belief that the BMGs, the AFOs, can add value to the process by being more involved in the entire biennial process start to finish, and we'll talk a little bit more about that with the new system. So wanted to bring up our recurring audit findings. Gloria alluded to recurring P-card and T-card findings. Same thing with equipment. Rarely we get through one of our annual audits without equipment not found, equipment on inventory that they can't find. Or maybe I should back up a step and again saying, our regulations are annual financial audits, annual state compliance audits, annual federal compliance audits, and they all go out and observe equipment as part of each one of those audits. So what they find, equipment that they can't find, equipment found but it has no physical property tag on it, equipment found that's not on your inventory, location and other data in that record that's not accurate on the record, as well as no evidence of physical observation retained. And who sees these? Our key stakeholders, like we alluded to some other things, state regulators, our external funding agencies, as well as lending companies who lend money to the university are looking at our audit findings. And as well as taxpayers if they're well informed enough to go out and look for our audit findings. So we want all of our stakeholders to know we're good stewards of our resources. So let's turn to the current cycle for the West cycle. The 2019 biennial inventory has the due dates of certification due date is March 31st, 2019. Pending resolution due June 30, 2019. The system now, the biennial inventory application, will automatically send unit heads and unit contacts friendly reminders every month up until the point of certification. I do want to stress that we've got a lot of positive feedback about the new biennial system. It's been in use. Urbana was the first university to use the system. And I will say it provides greater access to inventory information to everybody in the unit. It provides much easier access to the results of the physical observation and really increased accountability, really all by everybody who has FabWeb access in your unit will now be able to view the status and all the items and the results. So add some real great accountability, which we think is a great thing in the system. Some people may not agree with that's great, but we think it is. So what have we done on the West Side? We've been through instructor-led FA 105 training. From August to October, we had trainings here at UIC. We've had some special sessions with the hospital and some of the regional satellites. We did some Zoom training for them. Just wanted to also offer our availability for more training. I know that Bunty Latif is going to, I think, coordinate some possible more training for hospital units specific. But if your unit, your school, your college has some people you need trained, please reach out to our office. We'll be happy to come out and give you an overview of the system and a little hand-holding to get you started. I do have some great hyperlinks on some of the slides today. So besides that, we do have hyperlinks up here to our full FA 105 training guide, as well as the Android training guide and the iOS training guide. So great resources out there online. On the east side, if you're on the east side, you'll be next. Your certification will be due for the 2020 cycle, March 31st, 2020. Just FYI, your system access in the new system then will begin on July 1st, 2019. So you can't do anything yet. Don't try to go to training before then. We'll get you trained when you have access to the system. And that will really be in the following that July date, August through October. We'll be out training again here at UIC. So look for an OBFS News Center announcement about that training, probably in the June, July timeframe if you're wanting to sign up for that training on the east side. So the biennial inventory application, all units must certify online. No paper forms will be accepted. So things to think about in 18 and 19 is device procurement. The system has a web-based component to it, and you can complete the whole cycle using the web, and there's no cost to the units. The problem is the web has almost no scanner or barcode reading functionality in it. So if you want to use barcodes to scan barcodes to take your inventory, we now have mobile applications which are of no cost. The application's of no cost to the units, but you will have to procure your own hardware. That's going to require a tablet, either Android or iOS, iOS meaning iPad. And you can obtain an optional scanner as well. The mobile app should be loaded on university-owned devices. I just want to wrap up a conversation of biennial listing our contacts. Magdalena, Juana Rodriguez, and myself. We all three are sysadmins for the new system. We have access to then your data. We understand how the system works, so please don't hesitate to reach out to any of the three of us if you have questions during your biennial cycle. But I would ask, if you do work with the new acquisitions people in our office, Ayanna Swain, Angie Russell, Patty McCreary, Ron Janowski, who normally might help you with your new acquisitions, they are not sysadmins in the system and will not be able to answer your questions about biennial. So do reach out to either Magdalena, Juana, or myself if you have questions about the biennial inventory. Any questions about biennial before I move on to updates? And I did that in less than 25 minutes. I'm pretty impressed. Nope, no questions. Okay, so just a few quick updates. We do have a new policy and procedure. We have new forms related to permanent outbound transfers of equipment, and especially to permanently transfers of equipment with researchers. So if you have equipment outbound for researchers, there are new forms. There's a new property accounting specific CAR form that goes along with a new university agreement relative to this outbound equipment, which must be signed by the university CFO and the recipient institution. But beyond the new agreement form, it was some of the reasons for the policy update is to handle export control of equipment. So there's now information on that about export controlled equipment. And there's actually revised schedules of equipment so that you can add more information there about your sponsored equipment or your export controlled equipment. And again, I think I would just reiterate what Scott said earlier. So if you've got one of those new outbound transfers, please go out to the website and start with a new form because the old forms will no longer be accepted. I just wanted to hit a couple high levels of other updates and information to share about property accounting. And a couple of these are JV adjustments to equipment. I want to real briefly talk about trade-ins, which may be an interesting topic we talk about more, but wanted to give a little bit of information about that, as well as fabricated equipment and our property accounting contact change form. So first, our JVs and adjustments to equipment. Just wanted to make sure people understand why we do JVs. The key is that any adjustment to an equipment record's CFOPL information requires a JV so that we can adjust the information on that specific asset record. So an example, if you guys decide, oh, I put the wrong program code on there, I put the wrong fund code on there, do a JV, that's going to get posted to that specific asset record so that its funding information is 100% accurate. So why are there so many? Again, those O tags and the P tags have to be updated through those individual JV lines, and those JV lines have got to be specific to the individual asset records. And as well as any and all CFOPL adjustments do get posted to the O tag. So a common example, if you bought a microscope and you only want one P tag for that microscope, but in the way it got invoiced, it generated 5 tags for the base and the lens and the refractive something else. We have to eliminate those other 4 asset records that got created, which is going to be 4 JV lines to go out and delete those transactions. Just so wanted to make sure everybody's aware of that. I think some of the key implications in our office, so that if you guys are doing those JVs where you're adjusting an asset record, you can really help yourselves and our office up by referencing the banner source documents and the O tags related to that JV adjustment. So if you put that information either in the document reference field of the JV line or put it in your document text, our office can read that and make the adjustments to the records, likely without even reaching out to your office for a call or a return voicemail where we're voicemailing back and forth or emailing back and forth. So really, if you do any adjustments, please document the related O tag and the banner source documents that you're adjusting. You can also limit your errors and adjustments in purchasing through centralization of the process. So we just always highly encourage that. We do have some best practice documentation on our equipment management website. If you're looking to try to do stuff like that, as a good resource for you. Oh, I do go back. One other thing, I think somebody mentioned Banner 9 bugs. We do have one Banner 9 bug, and that is talking about that process of inactivating and deleting tags that got created. We're actually having a problem since Banner implemented. We can't inactivate those records anymore. The good news is we do have a workaround that works in about 80% of the cases, but there doesn't work for every one of them. So if you guys are trying to get rid of O tags out of your FabWeb inbox and you're seeing them not come off, it may be related to that Banner 9 bug. Until we can get that fixed, some of those O tags may stay out there that are going to get canceled. So just continue to communicate to our office and with your new acquisitions property contact on any issues related to that. Trade-ins. Want to just mention trade-ins and trade-in allowance handling real quick. The university, by the powers of the state, allow us to do trade-ins, but not for state-funded equipment. If your equipment was bought on state appropriations, we should be going to CMS for pre-approval of those trade-ins. All other equipment bought on ICR, any other fund type, we can trade that equipment in without CMS pre-approval. Other regulation, that's only for new purchases of like-kind equipment. So you shouldn't be trading in your copier for a brand new spectrometer or some other piece of, those are not like kinds of equipment. Trade-ins cannot be for store credits. And again, sometimes we see people trying to trade in stuff for supplies. Again, not allowable through state regulations. Actually, what you may not know, so the trade-in allowance is added to the value of the newly purchased items. And so the process is supposed to work where you guys in the units, when you're procuring an item and you're trading in a piece of equipment, you're to document the items that were traded in the procurement documentation itself. On the purchase order or the I buy notes somewhere in whatever system you're using to procure that information, we need to know what items you traded in. Because actually what happens is we complete that process, we'll complete the disposal of the items traded in while we're doing the valuation and creation of the new assets. So again, anything traded in, try to document that in your procurement documentation so that our office can do that and do it as efficiently as possible. And this might be where I get a question, but I'm going to run through it anyway, Gloria. Fabricated equipment. And what is fabricated equipment? It's really where we're buying multiple small items or supplies. They don't necessarily have to be small, but we're buying multiple items to fabricate a piece of equipment. We generally see this more in the research-intensive areas where they're having to build scientific equipment. But you may have other areas where you're trying to build computers or some other reason. For these types of situations, you want to account for them as fabricated equipment, and when you buy them, you can buy them into the account code range 128, and those costs will accumulate. Our office tracks those every year, and your unit should track anything coded into that as well. And then when your unit has completed that equipment fabrication, you should inform our office that that fabrication is complete and identify the related procurement entries. And either your office or our office will complete the JV to reclass those expenses out of 128 into the appropriate equipment account code, either the 127 or the 163, at the point of completion of that fabrication. I know there are some questions about that. Some people said they weren't happy with how that hits their grants. So we may have some revisions to that. I'd be happy to come to an advisory group and chat more about that. But we'll put that in the parking lot for today. Just wanted to make a note about communication is really key in the biennial process. So knowing who your contacts are. And again, if you don't know, it's your unit's responsibility to designate a single unit property accounting contact and to provide to our office updates when you have a change in your unit head. And that's exactly what we have, a property accounting contact change form. This is all documented in policy 12.2.2, serving as a unit property accounting contact. That is an active hyperlink, one of my hyperlinks out here, so you can get to that. And you can always see the current listing of who's designated in your department by going out to our website. Under our helpful documents, we have a list of department property contacts. So please do go out there periodically and make sure that information's accurate so that the information flows between our office and yours. With that, 15 minutes early. Any questions? All right. It was the clarity.
Are there any other questions or comments you'd like to bring to the group today? If not, please feel free to reach out to me at any time. Bernadette Rossmore returns from her FMLA, so my office is just going to be fully staffed. I'm very excited about that, starting right after Thanksgiving. Please feel free to reach out to us, and we're glad to work with you. And I cannot believe that it's time for me to say this today, but I hope you all have wonderful holidays and spend time with family and friends and have restful and productive time away when you get to do that. See you in the new year.